Right. From this video, I'm going to teach you how to prepare bank reconciliation, which comes from 2010 A-level paper. Right. So let's read the question. The bank statement of a business showed a credit balance. Right. Credit balance means in bank statement had 3000 credit balance. So normally bank statement, if bank statement has favorable balance, right, definitely there should be a credit balance, right? Then bank statement credit balance means favorable balance, that means good balance, okay, as at 2010 31st March. The following information was revealed when reconciliation the cash book with the bank statement balance as of that date, right? There are four differences and required prepare the bank reconciliation for the month of March. Then second one, the balance of cash book, right? The balance of cash book. Then number three, journal entry to record the dishonored check, right? Then read the question, read the differences. Number one, check deposited amounting to 80,000 has not yet been realized. Right, not yet been realized means this is time differences, right? Time differences, we have to consider this difference reason for the prepare the bank reconciliation. Then next one, the check issued to supplier 30,000 has not yet been presented to the bank. That means business has paid, but bank still not yet paid, right? Unpresent. That one also considered to prepare bank reconciliation. Next one, bank charges 500,000 and standing order payments 1,500 for rent, right? These are not yet recorded in cash account, right? So we have to, when we are adjusting our cash account, we have to consider these uh, reasons. We call these reasons omissions, right? Omissions. Then number four, no entry has been made in the cash book with respect to the check amounting to 20,000 returned by the bank, right? This check had been received from debtor and it deposited in the bank, right? This one actually dishonored check, right? Dishonored check. So we have to actually bank has already dishonored, already rejected, but business doesn't know about that transaction. Business doesn't know about that dishonor. So business has to adjust the cash control account, right? This one also omission. So number one and number two should be considered to prepare bank reconciliation. Number three and number four should be considered to prepare adjust the cash control account, right? So number one, bank reconciliation statement we have to prepare, right? But look at the balance. Question has given actually bank statement balance. Okay, bank statement balance, right? So question number one asks we have to prepare bank reconciliation, but question has no actually already given bank statement balance, not the cash account balance, right? Now normally we have learned how to prepare bank reconciliation from adjusted cash balance to bank statement balance, right? Adjusted cash balance to bank statement balance. But in this question I am teach you how to prepare bank reconciliation from starting bank statement balance to unknown. Here in this question we don't know about the adjusted cash balance. So now I am going to teach you how to prepare bank reconciliation from starting bank statement balance to get the adjusted cash balance, right? Adjusted cash balance. So if we want to prepare bank reconciliation, we have to consider actually time differences and bank statement errors. But in this question actually given only the time differences, unrealized checks and unpresented checks, right? I will get unpresented checks to explain how can we add or minus, what's the logic, right? Okay, unpresented checks. how much unpresented? Right. So in this question actually unpresented checks were 30,000. Right. Let's see what's the logic behind this transaction. Right. I will draw some identify the difference. Right. Because of this reason unpresented checks, I will write down some working to identify the differences because of this reason. Right. Normally bank statement sent by the bank, no, but it likes column, right? Columns, debit column and credit column and the balance. But I will write down here bank statement like T account, right? T account in credit side, bank recording deposits, but in debit side bank recording payments. But this is our cash account. This is maintained by the business, right? Let's think to identify this reason, I am assuming some amounts, right? So if we have good balance in cash account, let's think may be recorded in debit side, but in bank statement they recorded in credit side. This is I assume this one to identify the reason, right? If you want, you can put any amount, but same amounts, cash account and bank statement balance, right? Same amounts. Right. Look at here. Unpresented means issued. Issued, business has issued, but still bank has not yet paid. Bank is still not yet paid, right? So that means if business issued a check, business recorded it in credit side of the cash account, right? Deposits debit side, but in cash account payments recorded in the credit side, but bank recorded in opposite side of the cash account, but bank statement payments recorded in debit side, no, this one should be recorded in here. But if they not yet paid, they has not yet recorded it in the debit side, right? This is the scenario. Unpresented checks, this is the scenario. So we can identify what happened to the two balances. What is the difference between two balances? Look at here. Look at, if business has issued check, they have recorded 30,000. Then cash account balance will be decreased, right? These two amounts I assumed to identify the difference. If you want, you can put any amounts to identify the difference, right? Then but bank statement not yet paid that amount, right? Then this balance also should be decreased, but if not paid, then balance is still same, right? We don't care about the correct balance. To identify look at these two balances, what is the difference between two balances? 30,000, right? 30,000. If you have put any amounts, same amounts, balances, you should got the 30,000 difference, right? Right. Okay. Now here also same, right? Bank statement not yet paid, but in cash account it should already paid. Now we are going to get this unknown balance, right? This is actually prototype. This is a prototype to identify the difference. Now we are here bank statement. How we are going to identify that balance unadjusted balance from bank statement balance to cash account. Now may look at business has paid, but bank has not yet paid. Then bank statement balance higher than the cash account. Now අපි මෙතන ඉඳලා යන්න ඕන. Then we have to from higher balance to get lower unknown balance. If you want to get this 100,000 to 70,000, what we have to do? We have to deduct that amount right? This is the prototype actually, right? Don't think what happened from where we get, I got this 100 and 100. This is actually, I put that amounts to identify the difference, right? Identify the difference. Then bank statement balance higher than the cash account by 30,000. Then if we want to get lower balance, we have to deduct that amount. Same here, business has paid, then cash account balance lower, but bank statement not yet paid, then bank statement balance higher, then higher balance, from higher balance to get lower balance. What we have to do? We have to deduct that amount. We have to deduct unpresented check, right? Unpresented checks, right? Very easy. So next difference, unrealized checks. What should we do to the bank reconciliation? Unrealized, right? Unrealized checks. So unrealized means business has deposited check into the bank, but they have recorded in cash account, but bank not yet deposited that check to our current account, right? We have deposited, but we have recorded, business has recorded, but bank not yet deposited that check to our current account. So what's the scenario? I will take same thing to identify the difference here. I will put my cash account debit balance, cash bank statement same should have credit balance. I will put this same balance to identify what happened to the balances, what is the difference between these two balances, right? Actually this is the prototype to identify the difference, right? Look at me. If you want, you can put some same amounts, then you can get only the difference between these two balance, 80,000, right? Deposited, when we are depositing, we recorded in debit side of the cash account, but bank statement they should recorded in credit side, right? Credit side. But if they not realized, not deposited, no, then they have not yet recorded in credit side, right? Credit side. This is the scenario. We have recorded as a deposit, but unrealized means in bank statement they have not yet recorded, right? So what happened to the balances? If we have recorded, our cash balance should be increased, but bank statement balance is still same, not increased. Look at here also same. Bank's cash account, in cash account we have recorded, then cash account balance should be increased, but in bank statement not yet recorded. When compared to the cash balance, bank statement balance lower. From we are going to get from lower balance to get higher balance. From lower balance to get higher balance. What we have to do that difference? We have to add. 80,000, right? 80,000. Yes, I write here in thousands. Third, 80,000. Unrealized, right? Okay. This is the things we should consider when preparing the bank reconciliation, right? From bank statement we are going to get adjusted cash balance. Now get the adjusted cash balance. Here 83, then 30 means adjusted cash balance should be 53, right? This is the first one, right? Answer number first one. Okay. Number 2, here from the bank reconciliation we identified how to prepare, how we did get, how we have got the adjusted cash balance, right? Adjusted cash balance. So question number 2 asks actually what is the balance of cash account before adjust the cash balance. What is the balance of before adjust the cash balance, right? Okay. Now Number 2, I will write here adjusted cash account, right? So Lamai, already we found the adjusted cash balance. Adjusted cash balance comes from debit side, no? Debit side. How much? 53. This is the adjusted balance, right? Now අනිත් පැත්තට යන්න අපි. හරි, bank statement carried 53. So we have to find out how much was the opening balance. Not opening, actually closing balance before the adjusted, right? Balance, right? This is the balance before adjust, right? Adjust. So what are the things we have to consider when preparing the adjusted cash balance? Omissions, right? Look at number 3 and number 4. Bank charges we have missed, so we have to record in credit side. Bank charges would be 500 means in 1000, 0.5. Standing order payment, business, bank has paid but business not yet recorded, 1500, right? And also number 4, business, number 4, no entry has been made in cash account with respect to the check amount into 20,000 that received from debtor. 20,000 received from debtor, we recorded it as deposit, but bank, it has been rejected, it has been dishonored, right? It has been dishonored. When we are depositing, we recorded in debit side, right? We recorded in debit side deposits, but bank has been rejected it, right? Bank has rejected, dishonored. So we have to remove that deposit. When we are recording, when depositing, we record in debit side, we dishonored. Again we have to remove dishonored. How much? 20,000. Yes, these are the omissions we have to consider when preparing the adjusted balance. So we are going to get how much the balance before adjusted, right? So look at here, how much? 22, 75, right? Yeah, and here also 75. Then how much was the balance before the adjusted cash balance? 75,000, right? So number 2 should be 75,000, right? 75,000. Okay, last one, double entry for dishonored check. In round number 4, there was actually a deposit check received from debtors 20,000, but later it has been dishonored by the bank. 20,000. Right, dishonored, that means bank has rejected. Before identify the dishonored double entry, you should identify the what is the double entry for check receiving from the debtors. Check receiving, when receiving checks, we identify our cash asset increase. Cash asset increase debit, no, but debtor asset will be decrease. Debtor control account credit, right? This is a double entry check receiving check from the debtors. Check receiving means same as cash receiving, right? But when dishonored it, we have to reverse this entry. So what is the entry? Cash debit, debtor credit, no, but it when it dishonored, when it rejected, we have to revise this. Look at debtor credit, then we have to debtor debit. Debtor control debit 20,000. Cash debit, dishonored, we have to credit. Cash credit 20,000, right? Cash credit 20,000. So this is the double entry for dishonored check, right? Dishonored check. Very easy questions, but if you have logically, you can logically think, you can easily prepare the bank reconciliation, right? Okay.